Hey guys, everything going sun here? It's a new week, and it is finally sunny out, and spring has come, so it's great for the homesteading side of my channel. And there's more economic news again. It's kind of winding up again. We were in a little bit of a lull time, and now this article is from Zero Hedge. Full-blown panic mode at the Fed. Someone seems to have hit the emergency button at the Fed. As even though the central bank said that everything was fine just with the American economy just a few weeks ago, the situation has currently escalated into a full-blown panic mode. So what does that mean? On Thursday, the Board of Governors of the Federal Reserve has called an emergency meeting for Monday the 11th. That's today. That by itself is already very surprising, but a lot can be explained after looking at the most recent publication of the Atlantic Fed. The results of the forecasted GDP of the Atlantic Fed should push a lot of people and investors into a depression. Just 8 weeks ago, the Atlantic Fed forecasted GDP growth of approximately 2.5%, which would have been a very healthy growth rate. Even on March 11th, the Fed was still expecting GDP growth of 2.3%, so they had adjusted it down, probably unexpectedly, as they say. You can see the GDP here, downward, a fair margin there, obviously. It goes on, but since then, everything started to go downhill. In just 4 weeks' time, the Atlanta Fed has revised its GDP growth rate from 2.3 to just 0.1%. So how did they not see this months ago? The truth is they probably did, but they didn't want to report that. And so it's easier to come after the fact and say, oops, something unexpected happened, and we have to revise downwards. Because these statistics don't change the numbers that fast in general. They probably see these things coming. Which means we are basically at a tipping point between a growing economy and the first signs of a new recession. Whatever the final outcome will be, it is now pretty clear that the economy in the United States is stalling. And the United States, again, was one of the kind of the last economies to really feel the effect because the dollar has been floating high, propped up by people who were looking for a safe haven, and the U.S. dollar being the world reserve currency, it was a safe haven for a lot of people. So that was propping the U.S. economy up, even though it wasn't doing technically any better than other economies. Just 2 weeks ago, we started to warn you for this, as corporate profits are going down and increases in EPS were mainly boosted by the company's share buyback programs and not by higher net profits. We were also very worried to see that a lot of companies are overspending on share buybacks rather than strengthening their balance sheets, and we were afraid this would return into the spaces like a boomerang. This also seems to confirm by the money flow index of the S&P index. The last time we reached an overbought status on the indicator, the S&P fell by 15%. Just a few weeks later, we will re-experience the same sell-off. So what will the Federal Reserve do now with the revised GDP estimates? There's absolutely no way the Federal Reserve will be able to hike the interest rates by 4 times this year. So here you go. Here's proof and confirmation that they will not raise rates again. And even the revised target of 2 times will be a bridge too far. In fact, it's now pretty likely the Fed won't be able to push through any rate increase in the current calendar year. And it's now pretty clear that the American economy cannot support a rate hike. But it does look like the market is convinced the situation is really bad right now. So the confidence of people is turning. People are kind of recognizing things are not going well. And once that confidence starts to fade and people start to head downwards, they start pulling money out of the markets, people start saving, which is not what the central banks want. People kind of pull back and contract, and that's what contracts the whole economy. And then you get a whole a momentum downwards for the economy because everybody's pulling back. People are spending less as they worry about the economy. Considering this, the Bank of America has recently released a piece of research claiming investors have been extremely bullish lately. Equity funds have seen a cash inflow of excess of $5 billion in the past few weeks. So it looks like investors are either denying the Penn state of the American economy, or are relying on the Federal Reserve posting a new policy and forgetting about any rate hikes this year. It used to be Europe that was the sick man of the world economy. With a depressing outlook for the Atlanta Fed, situation seems to be changing right now, and the feared R-word recession is popping up again. So there we go. They're having an emergency meeting today, and we'll see what comes out of it. They'll probably use the word unexpected as the GDP is trending downwards. And I think I think as we go on, we'll see even an even readjusted one, maybe to the negative side for GDP. Certainly, if we're going to have a crash, we're gonna have to see that sort of thing. Further erode confidence in the market. So it's kind of what I expect going forward if we're going to see any sort of a market crash. And all indications suggest that we're going to see another 2008-2009 period here. And again, if it's going to happen within that kind of 7-year time frame period pattern, then it's got to happen before, basically before September, October, which is the beginning of the new Jewish year. So look out. This could be one of the triggers and be a cascade event where you see a whole pile of other things start falling in line. Maybe all of a sudden banks come out and say, okay, we put our hands up, here at White Flag, we are having troubles as well. And maybe companies start admitting that they're having a lot of trouble. And that's when you will really see a speed up, an increase in events happening, as then customer confidence from the general consumer will really tank. And when people really realize that the U.S. dollar is not a safe haven, and that's the other thing, when the world confidence recognizes that the U.S. dollar is not really a safe haven for their money, and they stop buying dollars, then all of a sudden the U.S. dollar starts going downwards again and deflating. So that is the as I drink my coffee this morning, that is my economic update for the day. And we should have some interesting news this afternoon by the time the Fed have their emergency meeting to figure out what to do with this massive GDP readjustment, where they started at 2.5 and now it's 0.1% down there. So that's a massive, massive drop that they're going to have to explain. They're going to have to prop up consumer, prop up the confidence, prop up the economy by talking about it, talking it up. And will they succeed? I don't know. One of these things is going to be the trigger point where it collapses. So we don't know. But I'll leave it at that, and we'll see what happens this afternoon. Thanks for watching. Please subscribe, and talk to you in the next video.